Tesla recently released their 2026 quarter one earnings, and at first glance, everything seemed great. The company beat analyst expectations, and as a result, the stock jumped over 4% in after-hours trading. But by the time the actual earnings call was finished that evening, it became clear that everything wasn't as sunshine and rainbows as it first seemed. Some analysts were quick to call Tesla's tactics to make their earnings look appealing questionable. The more you learned about how the company actually performed, as well as the fact that Elon Musk walked back a prior promise that will now affect millions of Tesla customers, the more dire the situation appeared. Another thing that's dire is the fact that you're watching this and probably aren't subscribed, so make sure to subscribe. Tesla reported quarter one revenue of $22.38 billion, a 16% year-over-year increase from their quarter one 2025 figure of $19.3 billion. Net income came in at $477 million compared to $409 million a year ago. On paper, this looked great, and as I already mentioned, investors responded accordingly. The stock jumped over 4% in after-hours trading. However, there are some massive asterisks to this earnings report. First off, the company's year-over-year growth is pretty misleading, considering the fact that quarter one of 2025 was the company's worst quarter in recent history. So it's not exactly super impressive that Tesla reported better year-over-year figures this quarter. Second, Tesla pulled off some maneuvers that made their financials look much more appealing than they actually were, a move that people were quick to call questionable, as I already stated. Tesla's CFO stated on the earnings call that Tesla had certain one-time benefits from warranty write-downs and some relief on tariffs. What this means is that Tesla reported significant one-time benefits on this earnings report to make the numbers look better than they actually were. Now you're probably asking, what exactly do these one-time benefits entail? Well, warranty benefits is referring to a pool of money that car companies typically set aside to cover any potential future warranty repairs. If they later decide they overestimated these costs, maybe because their cars proved more reliable than expected or repair costs dropped, the company can release some of these reserves back into their profits. This is obviously a one-time accounting gain, not actual new cash coming in the door. Tariff benefits refers to, well, benefits related to Trump's tariffs being struck down by the Supreme Court. Since companies like Tesla had paid a lot more due to Trump's tariffs, and then the Supreme Court subsequently ruled that these tariffs were illegal, these companies are owed refunds from the federal government. Tesla apparently recognized these refunds on their income statement during this quarter. So, in other words, warranty and tariff benefits are essentially accounting tactics that won't be able to be repeated next quarter. And come to find out that Tesla reported roughly $230 million in warranty write-downs and roughly $250 million in tariff relief, meaning they reported nearly $500 million in combined one-time benefits this quarter. Now, to be crystal clear, these are legitimate accounting practices. However, they provide important context to Tesla's seemingly impressive quarterly earnings. In fact, interestingly enough, in the company's earnings deck, the first item listed under profitability was this increase in automotive one-time benefits related to warranty and tariffs, ahead of things like growth in services and increase in vehicle deliveries. This framing by Tesla makes it clear that these one-time benefits were the primary drivers of the earnings beat, not true underlying business improvement. So now you can probably see why investors became worried when the context of Tesla's financial performance was revealed. Tesla's stock actually erased its after-hours gain when the market opened the following morning, and ended that day down over 3%. And the craziest part is that there's another worrying factor that Tesla reported that a lot of people didn't catch. I know, Tesla bears are grinning ear to ear right now. This worrying factor is the gap between Tesla's vehicle production and deliveries figures. Quarter one of 2026 saw Tesla report production of 408,386 vehicles, but just 358,023 deliveries. Not only are these figures some of the lowest in recent history, but this is also a gap of over 50,300 vehicles that are sitting unsold. If that seems like a lot, that's because it is a lot. It's Tesla's new record of surplus vehicles produced in a single quarter, beating quarter one of 2024's surplus of over 46,500 vehicles. In simple English, not only are people not wanting to buy Teslas nearly as much as they once were, but Tesla is also seemingly unable to correctly gauge how unpopular their vehicles have become. Both of these are very worrying signs if you're a believer in Tesla, because of course you want the product to be popular, but you also want the company to be able to have a good read on their consumers and the market. And finally, in classic Elon and Tesla fashion, a prior promise was walked back in what was probably the most controversial part of this earnings call. The promise revolved around Tesla vehicles with Hardware 3, which is the onboard computer chip that Tesla installed in its cars between 2019 and early 2023. Throughout Tesla's history, Musk has claimed that all vehicles with Hardware 3 will be able to support full self-driving, or FSD, at one point in time in the future. In fact, a blog post on Tesla's website from 2016 claims that all Tesla vehicles produced will have the hardware needed for full self-driving capability. FSD is still not a reality yet for Tesla, even though they are close. However, Tesla customers with Hardware 3 have constantly been reassured that they will still be able to have FSD once it becomes a reality. Well, that was until this Q1 2026 earnings call, in which Elon stated, "Unfortunately, Hardware 3 simply does not have the capability to achieve unsupervised FSD." Yup, that's right. Elon misled customers once again. I know, just an absolute shocker. The reason that this admission by Musk is significant is because roughly 4 million Tesla customers who currently have Hardware 3 will have no choice but to buy a new Tesla if they want FSD. A significant portion of these customers additionally paid up to $15,000 for the FSD package while being told that their Hardware 3 car could eventually support it. This is obviously not the case anymore. Let me know what you think of Tesla's questionable accounting tactics and production surplus this quarter, as well as Musk's Hardware 3 admission. And don't forget to subscribe to stay up to date on all things business, finance, and technology.